On September 29, 2025, the gaming world was rocked by a seismic announcement. Electronic Arts, or EA, one of the most influential and recognizable names in interactive entertainment, will be acquired in a staggering $55 billion private buyout. The news sent shockwaves through the industry, with headlines dominating social media feeds, business news outlets, and gaming forums alike. For many, it felt like the end of an era and the beginning of something entirely new. This is not just another business deal. It's one of the largest acquisitions in the history of gaming, rivaling the biggest mergers ever seen in the tech and entertainment sectors. The deal stands as the second largest in the industry, just behind Microsoft's monumental purchase of Activision Blizzard. With this move, EA will be taken off the public stock market, signaling a dramatic transformation in the business landscape of gaming. It's a clear sign that the stakes and the ambitions have never been higher. EA has long been a powerhouse, known for blockbuster franchises like Madden NFL, EA Sports FC, Dragon Age, and Apex Legends. These games have shaped the experiences of millions of players worldwide, setting trends and pushing the boundaries of what's possible in interactive entertainment. Now freed from the constant scrutiny and demands of public shareholders, EA is poised to enter a bold new era. The company will have the flexibility to innovate, take creative risks, and pursue long-term visions that might have been difficult under the pressures of quarterly earnings reports. This buyout is more than a financial transaction. It's a statement of confidence in the future of gaming. The investor group behind the deal is betting big that the industry's explosive growth is far from over, and that new opportunities are just around the corner. With gaming now a dominant force in global entertainment, investors believe we're only at the beginning of what's possible. The industry's reach continues to expand, drawing in new audiences and pushing technological boundaries. In this video, we'll break down the key players behind this historic deal, explore the motivations driving such a massive acquisition, and discuss what it all means for gamers, developers, and the future of the industry as a whole. Get ready to dive into a landmark moment that could redefine gaming for years to come. The $55 billion buyout of Electronic Arts is being orchestrated by a formidable trio of financial powerhouses: Saudi Arabia's public investment fund, known as the PIF, American private equity titan Silver Lake, and Affinity Partners, the investment firm led by Jared Kushner. This unprecedented partnership brings together not just vast financial resources, but also a unique blend of global influence, strategic vision, and deep industry expertise. Silver Lake, a major force in the world of private equity, is renowned for its bold moves in the technology sector. The firm has a long track record of taking tech giants private, including landmark deals with companies like Dell and Skype. Their involvement signals a strong belief in the transformative potential of EA and a willingness to invest heavily in the future of gaming. Affinity Partners, led by Jared Kushner, brings a unique political and diplomatic edge to the table. With deep connections in both the Middle East and the West, Affinity is positioned to help navigate the complex regulatory and geopolitical landscape that comes with such a high-profile acquisition. The PIF, already a significant shareholder in EA, is now stepping up to take a leading role. This move is part of Saudi Arabia's broader strategy to diversify its economy and establish itself as a global leader in the gaming and entertainment industries. By increasing its stake, the PIF aims to drive innovation and growth within EA, while also advancing the kingdom's ambitious Vision 2030 goals. Silver Lake's expertise in managing large-scale technology investments will be crucial as EA navigates the rapidly evolving gaming landscape. Their history of successful turnarounds and value creation in the tech sector makes them an ideal partner for this ambitious venture. Affinity Partners' involvement also adds a layer of political sophistication, ensuring that the deal is not just about financial gain, but also about building bridges between regions and fostering international collaboration in the gaming world. Together, these three entities combine state-backed capital, private equity expertise, and influential political connections. Their collaboration represents a new era of cross-border investment and strategic partnership in the gaming industry. This alliance is making a bold bet on unlocking new value at EA, aiming to reshape not only the company's future, but potentially the entire landscape of interactive entertainment. The sheer scale and unique makeup of this consortium make this one of the most ambitious and closely watched deals in gaming history, with the potential to set new precedents for the industry worldwide. The investor group has announced a bold move. They will pay $210 for every single share of Electronic Arts or EA stock. This offer is not just a routine transaction, it's a significant premium over what the stock was trading at just a day before. In fact, the $210 per share price represents a 25% premium over the previous day's closing price. This kind of premium is designed to grab the attention of shareholders and make the offer too attractive to ignore, ensuring their support for the deal. To fund this massive $55 billion buyout, the investor group is relying on a carefully structured mix of financing. $20 billion will come from debt, with JPMorgan Chase leading the charge in arranging the necessary loans and credit facilities. This debt component is crucial, as it allows the consortium to leverage their investment and maximize returns. The rest of the funding comes from equity contributions by the consortium itself. Among these investors, the Public Investment Fund, or PIF, stands out as the largest and most influential backer, providing a significant portion of the capital needed to close the deal. To ensure that both sides are fully committed to seeing the deal through, a $1 billion breakup fee has been put in place. This legal safeguard is standard in deals of this size, acting as a deterrent against last-minute changes of heart. If either party decides to walk away from the agreement after signing, they'll be required to pay this hefty penalty, reinforcing the seriousness and binding nature of the buyout. Once all the paperwork is finalized and regulatory approvals are secured, EA will be delisted from the Nasdaq Stock Exchange. The company will transition from being publicly traded to operating as a private entity, away from the daily scrutiny of Wall Street. EA's current leadership team will remain in place, but now they'll have the freedom to focus on long-term strategy, creative innovation, and bold new projects, without the constant pressure to deliver quarterly results to public investors. The structure of this buyout is carefully designed to reward existing shareholders with an immediate and substantial return on their investment, while also setting the stage for EA's next chapter. For EA, this new era means the chance to reinvent itself, take creative risks, and pursue ambitious goals that might have been out of reach under the constraints of public ownership. This is more than just a financial transaction. It's a transformative moment for one of gaming's biggest names, with the potential to reshape the future of interactive entertainment. The EA acquisition is a centerpiece of Saudi Arabia's Vision 2030, a plan to diversify its economy beyond oil. Crown Prince Mohammed bin Salman, an avid gamer, is driving a $38 billion push into gaming through the PIF's Savvy Games Group. The goal: build a global gaming ecosystem, from acquiring publishers to hosting massive esports events. The PIF already owns stakes in Nintendo, Capcom, Take-Two, and more, and recently acquired Niantic, creator of Pokémon Go. By hosting events like the $70 million Esports World Cup, Saudi Arabia is positioning itself as a global gaming hub. Owning EA and its esports titles cements the kingdom's influence in the industry. Saudi Arabia's strategy extends far beyond gaming, using the PIF to reshape global sports and entertainment. The PIF created Live Golf, shaking up professional golf with huge payouts, and invested in the Professional Fighters League to rival the UFC. In soccer, the PIF bought Newcastle United and lured superstars to the Saudi Pro League with record salaries. These moves have drawn accusations of sports washing, using high-profile investments to distract from the kingdom's human rights record. Critics point to issues like the murder of journalist Jamal Khashoggi and repression of dissidents. The EA deal is the latest, and perhaps most controversial step in Saudi Arabia's campaign to build global soft power. For players, little will change immediately. EA's leadership and major game releases will continue as planned. Going private gives EA freedom to pursue ambitious projects, invest in new IP, and experiment with emerging tech like AI and cloud gaming. The new owners are betting on AI to streamline development and boost profits. But with less transparency, there's concern about aggressive monetization and reduced creative risk-taking. Decisions about game features and pricing could be made behind closed doors, focused on private equity returns. The deal accelerates industry consolidation, making it harder for indie studios to compete. EA's fate as a private company will be a test case for the future of gaming. Will this unlock creativity or just drive profits at the expense of players? Saudi Arabia's lead role in the buyout raises major U.S. national security and data privacy concerns. EA holds vast amounts of personal data on millions of players, names, payment info, chat logs, and more. The Committee on Foreign Investment in the United States, CFIUS, will review the deal, focusing on who controls and accesses this sensitive data. Regulators will likely require that U.S. player data stays on American soil, managed by vetted entities. CFIUS has blocked deals before, like TikTok's Chinese ownership, over similar concerns. The EA review will set a precedent for future foreign investment in U.S. tech and entertainment. Balancing investment with national security will be a defining challenge for this deal. The EA buyout is politically charged, with Saudi government involvement and Jared Kushner's firm at the center. Kushner's post-White House ties to the PIF have sparked conflict of interest accusations. Lawmakers from both parties are raising alarms about data security and the optics of selling a major U.S. cultural brand to a controversial regime. Human rights activists warn the deal enables games washing, using entertainment to launder Saudi Arabia's image. The CFIUS review will be under intense political and public scrutiny. The outcome will signal how the U.S. handles foreign investment from autocratic nations in sensitive industries. This is more than a business deal. It's a geopolitical flashpoint. EA's $55 billion buyout is a turning point for gaming, blending global finance, national strategy, and political controversy. The deal's fate hinges on regulatory approval, especially the CFIUS review of data security and foreign influence. The gaming world is watching. Will private ownership spark innovation or lead to aggressive monetization? The outcome will shape the future of iconic franchises and set the tone for industry consolidation. For players, investors, and policymakers, this is a defining moment for the value and power of video games. The challenges are immense, but so is the potential for transformation. Whether this deal succeeds or fails, its impact will echo across the entertainment world for years to come.